Hey guys, what's going on? My name is Richard, and today I'm joined by Jack or Alphacharts, and we're just going to give a brief kind of take on the market as it stands today, and then transition at the end talking about a couple different stocks that we have our eyes on. So thanks so much for being here, Jack. Great to see you.
Yeah, good to see you, Richard. How's everything going?
It's going well as it can be. Stuck inside, but managed to go out on a few runs the past couple of days, so that's nice.
Good, excellent. I have the wife and kids home, so you may hear some noise in the background, but it shouldn't be too bad.
No problem. So why don't we get started? And Jack, you do a great job, I think, each weekend going through all the major ETFs and talking about their trends. So why don't you go ahead and kind of run us through kind of your normal process?
Okay, so I always start with the major averages. Here's the SPX. Now this area, we'll say up to maybe 2820, area or so, maybe going up to 2830. I think this is really, really important because that is where we have found resistance in the past and some support in the past. Also, this has been a major rally. We're up, almost 30% from the bottom. And the other thing is now there's three major gaps that are now apparent in this rally up. Now, all gaps I don't think have to be filled, but I think a lot of them are usually. And so these are areas that we may end up retesting. The other thing that we've noticed, I know you noticed this too, Richard, was that this is all coming on much decreasing volume, right? So this was the down, big volume, big red bars coming in here. Now we're showing decreasing volume. But even on the decreasing volume, we're still not seeing this big outsized buying like thrust, right? Yes, we went higher, but I'm not seeing like a conviction in the volume. At least that's the way I read it. So that's still keeping me cautious in this market. And the longer term moving averages are going down still. So they're still declining. And so until we can get above this area and, there's a lot of overhead supply here. Mm-hmm. Just a lot of overhead supply. That's the way I read it. So that's the SPX, the Qs, they look a lot better, right? Mm-hmm. This trend, and I've been talking about this trend for a while, this trend right here has been in place like since 2009 lows, and we're still in it, right? This little bump right there is not a big deal, right? We came right back in there. So, that's a huge positive for the market right there. And now we're above those averages I was worried about with the SPX declining. Well, there's, prices right there. Mm-hmm. So that's kind of what I'm seeing in those two. And of course, IWM is the weakest of the bunch. Mm-hmm. Not today, obviously, but it just is, looking that way. How about you? How do you feel about this market, Richard?
Yeah, so I'm seeing a lot of the same things that you're looking at. Right now, we're up against the 50-day moving average on the Qs, which for me is a point of resistance. And we're also still in we're not yet in a red, white, blue pattern. And I'm going to share my screen real quick. Let's see. And let me share TC2000. There we go. Do you see TC2000 right now?
Let's take a look. And yes.
Okay, perfect. So for those of you who aren't familiar with what this was taught to me by Dr. Eric Wish, who was my professor at the University of Maryland. And he uses this to basically see the overall trend in the market. And what he uses is a few short-term exponential moving averages in red, and the numbers are up here if you're curious what those are, and a few longer term in blue. So you've got from the 30 all the way up to the 60. And it does a pretty good job of mapping what the current trend in the market is. It fell off right around February 24th. It ended that red, white, blue uptrend. That's what we call it, where all the red exponential moving averages are above the blue, and ideally there's some white space in here. And right now, we're kind of testing it a little bit, but we're still not in a clear uptrend at this point. And there's a lot of times where it comes back up to the blue exponential moving averages and just bounces right back down. So until it pushes through that with conviction and forms a red, white, blue pattern on the Qs, and ideally both, as Jack mentioned, the IWM, which is a lot weaker, and the SPY, I'm not going to be very aggressive in this market. I think it still has to prove itself. Yeah, I think the Qs look very good relatively. But as I said, there's been some recent weakness. This day I really didn't like, the Tuesday, where we fell on the largest volume that we had since in a while. And then today as well, we're falling. Well, we're up a little bit at this time, but though this is 15 minutes delayed. But we've got 98% volume buzz. So to me, how this day closes is going to be telling. Are people going to want to hold over the weekend when there's risk of more bad news? Although recently, it does seem like social distancing is working, and we're kind of flattening that curve. And I was looking at the Johns Hopkins data, and it seemed like the rate of increases is flattening out, which is a good sign. But I mean, until the economy gets up and running, I don't know if I'm going to trust really any rally.
Yeah, no, I 100% agree with that. Yeah, so I watched John Hopkins data too. It does look like it's flattening, which is great. Now, the other thing is, today we had unemployment numbers, and I'm not this, unemployment type of person, but it was worse than expected, yet the market jumped up. And I think that's information in and of itself too. Whether it's the Fed behind it or whatever the reasons is, doesn't really matter. But it did well with bad news, and I think that's an important part too. So it's something that makes me. I think that's that helps the bull case, and and it's funny, the bulls and bears, they both have a strong case right now. Mm-hmm. I'm not in the camp of going down to 1,500 or something like that in SPX, but can we see another dip to create one more fear, sense of fear in the market? I think it's possible. Where it feels like we're going to go down to 1,500, I think it's less likely that we do. I think the SMH chart, that's an interesting chart because, go ahead and go to a weekly chart in this one.
Yeah, no problem.
And so the thing that's really interesting is that 100 level, if you zoom all the way out to 2,000, right? So let's go back it up all the way to like 2,000. That 100 level right there, boom. So see where 2000 topped out? Mm-hmm. And then, and so that's right around 100. Well, we're still above that level. Mm-hmm. So I think as long as we're above 100, I think that the edge has to go to it's still a bullish looking chart, right? I mean, because SMH is in everything, as we know, it's from cars to homes to whatever. So, I don't think anything's falling off a cliff as long as SMH holds above 100. So I trade SMH and things within the SMH, mm-hmm. But also I think it's a great indicator as far as health of the market goes. Because if SMH is under 100, I would be a lot more concerned about what's going on right now as far as the markets go.
For sure. And I think it's telling that both of us chose in our top 3 stocks that we're going to talk about, semiconductor stocks. I chose AMD and you chose IPHI, right?
Mm-hmm. Sure did.
Exactly. So, it's a promising new area, and I think as technology advances, it's just going to become more integral to everything. I've been learning a little bit about computer vision in one of my engineering classes, and it seems like processing power is key to a lot of the machine learning stuff, computer vision stuff. It just seems like it's going to become more and more relevant. So I agree. This is a nice looking chart if you erased that big fall in 2000, but overall still in a nice steady uptrend recently. So I want to get your take on the VIX because it was very high, but it has been dropping. Do you take a look at this all?
I do. I watch the VIX. I don't trade the VIX or anything like that, but I do watch it just to see what it's doing. So I mean, the VIX was spiked up to I think the highest level ever, right, or something close to that. Mm-hmm. And now it's it's been falling. Now it's under 50, which is good to see. It's still elevated though. It's still a 42. It's not like it's a 12. When it's 12, 13, that's an amazing time to be a trend trader, right? Because the trend is going to be nice and steady, and you're not going to get this crazy volatility. And usually you're making money at that point because you know the trend and it's going in one direction. Mm-hmm. So I think the VIX at 42. If we continue to see that drop, I mean, yeah, that's really bullish. Can we see one more spike up? I think we can, but here's the thing: it doesn't have to be today or tomorrow. It could be 2-3 weeks from now, right? So that's the thing. I think a lot of people are they have to understand what their time frame is, because like mine is weeks to months. And if I do a trade now, it's going to be a very short trade. Usually I won't put one on, I'll put one on Monday and have it off by Friday or Thursday or whatever the last day of the week is, because I don't want to hold over the weekend, because I don't know what kind of information could come out, and we could have a big gap one way or the other. So it's still elevated, and still, the VIX at 42 still makes me a little nervous.
Mm-hmm. Mm-hmm. And let's scroll back a little bit. So in those big drops, it can stay up there for a long time. So, and this correction right now has been very short-lived relative to like every other big drop. So a recovery in 3 months, I think it's a little bit unrealistic. I probably want it to go sideways a little bit. Form another higher low, ideally, and then move up from there. I think that would be more productive. And a lot of the leaders are forming very short-term bases, and they're kind of V-shaped as well. So even AMD, which is one of my picks, this isn't a very strong base, and it takes a long time to build a right side, maybe form another cup and handle right at that previous all-time high before it moves up. And a lot of stocks are setting up like this, where they have this V-shape, a little handle, but to me this isn't a very strong base, and it's kind of prone to failure. Yeah, go ahead.
No, I wouldn't say I completely agree with you. I know at the end of 2018 we had that nice V-shaped rally and kept going, right? But I don't think that's most of the time, when you look at just history, most of the time V-shaped rallies are the exception to the rule. I think usually you see more of a nicer base, consolidation near the bottom. You see volume changes, and then you see a true breakout. So I think that because we have some recency bias to 2018, and the market right now, it looks kind of like it's V-shaping. I think that it may suck in a lot of optimistic people that this is this is it. But there's so many people out of work. There's so many businesses that are literally producing zero revenue right now. Mm-hmm. And earnings season starts Monday, mm-hmm. right? Next week. So, that's all information that may be priced in, but I'm not sure if it is.
Exactly. And keep in mind, we don't have a crystal ball. We don't know what's going to happen. There could be a V-shaped rally for all we know, but we're talking about what the trend is right now and analyzing the current chart. We're not trying to predict exactly what's going to happen, but we're using the information from the price action to gauge how we're trading. So is there any other major ETFs that you maybe want to share your screen and talk about, or do you want to go ahead?
Let me go ahead and click share. Perfect. Okay, there we go. So the other thing I'd like to talk about is the credit spreads, because I like to look at those. And so this is IEI over high yield. And, I think this is one for the bulls here. I mean, we had a big spike up, and then now we're starting to see, tightening of credit. So I think that's good. I think that's a positive for the market with credit coming back down. This was pretty rough up here. This was back in, March 23rd. So that was the bottom, right? Up to this point, it was the bottom. And now look at today, boom. So I think that credit coming in is definitely one for the bulls. And let's be honest, price action itself is very positive. I mean, right now we're making a series of higher lows, right? And that's what we want to see. Higher highs so far, Again, if we can make it above this area, I think that may be a place you can manage risk against, right? Because that's what we want, like in here, it's hard to know where you're wrong in here, right? And I don't see much of an edge going on in this area. Now, at this area, with this prior support and resistance, so you can actually manage risk against it. Whether it's the right time, we don't know. That's a V. A lot of times you'll see a V bottom and then you'll see more of a U bottom here. Some people call that an Adam and Eve bottom or something like that. But, you'll see it different. Like here's one right here, V, U, right? And they didn't happen like a week apart, that was, 36 bars between, 33 bars between the bottoms. So it could take a month, it could take 2 months, it could take 3 months. But that, to me, is one of the more likely scenarios, is that we come back down at some point, make more of a U, a better base, like you were saying, and then re-challenge this area and hopefully keep going higher. Mm-hmm. The other thing that I wanted to talk about was the put-call ratio. Mm-hmm. And we'll go to that again. Looking just historically, it got to 1.5 at its worst. So this is people getting bearish or bullish, right? And so this is bearish right here. So you could say we want to do the opposite, right? To it's a contrarian indicator. But other major peaks, it didn't stop at 1.5. We went to 2, right? That's a daily, yeah. So we went to 2 up here. We went to 3 during the really bad 2009, 2010 crisis, right? So I think that I don't know if this is enough, right, for such a severe downtrend to create the fear in the market that may be needed for the true reversal. This is very subjective though, right? It could be enough. Maybe that was enough. But to me, hanging around at 0.87, that's a pretty, again, this is equity only. So this takes out the people hedging, right? Hedging their portfolio. So we're not using, indexes or anything in this. So there's only equities. And so people are actually starting to lean bullish again. And so that worries me a little bit. Did we get enough of a shakeout? Did we get enough fear in the market? So again, just something I'm looking at. And it may be enough. What do I know? It may be enough. But that's those were the charts, and of course XLF. That's one of my favorites to look at because I don't think XLF has to lead, but I think XLF has to participate. And looking at a weekly chart, this was the 07 highs. We hit it here in 2018. We hit it again. This was looking amazing for a breakout here. And then that's right where we fell off the cliff, right? So that's a failed breakout, fell off a cliff, went below this area that looked like it could be promising for support. And now on the weekly, at least, we have popped back above it. And we'll see if this area can hold going forward. So those are the charts that I like to look at for market direction. SMH being probably one of the most important ones that I look at. But that's that. What else do you have with this? Anything else that you're looking at that looks interesting to you?
Let's see my notes. All right, I think I talked about the positives and negatives that I mostly want to talk about. Although I do want to mention the GMI from wishingwealthball.com. If you're not familiar, that's the website that Dr. Eric Wish runs, and he has a general market index that basically is rated out of 6 based on technical indicators, 30-day moving averages, 30-week moving averages. And right now, the GMI signal overall is red. And historically, when it's red, it's a bad time to be in the market. So that's just one more reason why I'm a bit cautious at the moment. And the trades I am making, it's very small and very small overall risk to my portfolio. So why don't we talk about the individual stocks that we both picked to talk about today?
Sounds good. All right. So what stocks did you have in your list today?
Yeah. So I picked overall AMD, DXCM, and LVGO. One semiconductor and then 2 kind of medical products and services. So do you want me to go first?
Yeah, go first.
All right. So I'm going to share my screen. And here we go. So an overall, what I look for is strong price action supported by strong fundamentals. So the normal CAN-SLIM approach, good earnings, good sales growth, return on equity, and then overall a strong chart with a proper buy point. So overall, AMD still above that 30, well above the 30-day moving average at this point. 50-day moving average, it's above that as well. Both of those are curling up. The 10-day moving average, which is this blue dotted line, is curling up as well. So all the kind of short-term moving averages are moving up, which I like. And it's above this prior all-time high. If we go back to all the way back to 2000, it's above that at this point. So kind of looking a little bit like the SMH chart overall, but it's holding well above that prior high, which is called a green line in my terminology. And today it dropped down and since has recovered a little bit, it looks like. And I actually got in it today. So, and one more thing quickly, anything said in this kind of webinar is obviously for educational purposes only. It's just our opinions. And I know you say this warning before all your videos, but it shouldn't be a recommendation to buy or sell any equities.
For sure.
And taking a look at the fundamentals, the earnings growth last quarter up 300%, sales were up 50%, after-tax margins up 18%. There's a new line of products that it has just put out that are in cheaper price than a rival NVIDIA and also a little bit stronger. And the estimates for 2020 are for earnings is up 73% and for 2021 up 42%. So I really like all the fundamentals there. What do you think about AMD?
Love it, love it, love it. It's actually I have about 12 names on my focus list, and AMD is one of those names also. I love that chart. I think that it's holding up extremely well, and it's one I plan on participating with also at some point in the future.
Mm-hmm. And a lot of the stronger stocks like AMD really bounced hard off the 200-day moving average and then kind of formed a higher low and took over their 50 and 30-day moving averages. So if you're just looking for an easy way to find strong stocks, just make a scan that over and look for stocks that are over their 50, 200, and if you want 30-day moving average. I think that would give you a very strong list of stocks to start your process from.
And if you look at it, it almost has an inverse head and shoulder look to it also right there. Mm-hmm. Mm-hmm. And so it's right there, the neckline breaking out, hopefully. And it looks amazing. And you're right, I actually scan like that too. I always start my scan with things over 250 and I use a 20-day. But yeah, if price is below those, I'm really not that interested at that point.
It's showing a little bit it's showing weakness relative to the overall market at that point. Okay, yeah. So let's talk about DXCM now. So I actually made an entire video covering DXCM. So if you want a little bit more detail, I'll put the link in the description. But overall, it's also above those 30 and 50-day moving averages, although they're not going up as with AMD. But it is a medical products company focused on monitoring devices for type 2 diabetes. And its fundamentals recently have been fantastic. Earnings up 105% last quarter, sales up 37%, after-tax margins up 23%. The estimates for 2020 are up 12%, and for 2021 up another 42%. And one thing that I look for, as well as making sure a stock is over those key moving averages, is that group relative strength. And for medical products and devices from IBD, the group RS is an A+, which is the best you can hope for. So I also bought DXCM today as it was increasing on above average volume. The volume buzz right now is only 6.4%, but it was a little higher earlier. But overall, as I said, it's kind of got that small cup and then handle feel. I would like to see a kind of more U-shaped cup, but this is about as good as you're going to get in this market. So do you have any comments that you'd like to add on DXCM?
No, I mean, it looks a good one also. It's just, you never know with any of these stocks, right? But I like that one. And the nice consolidation right there in the handle. That's not bad at all. That looks pretty good. Mm-hmm. I like that.
And my last stock that I chose to talk about is LVGO, or LVGO Health. And this is a recent IPO. I don't like that it's below its kind of IPO price. That's kind of that's kind of a negative for me. But it did have this nice kind of long-term base starting from late November, and that it's kind of just breaking out over that level. And it's been acting really well, and it's had a few inside days recently, and the volume pattern is strong. You've got these huge up days, kind of some signals of institutional buying in there, and the earnings for this are also really good. Recently, they were up 118% last quarter in terms of earnings. Sales were up 137%, margins up 4.5%, and it's supposed to be profitable in 2021. So there's another promising kind of medical products company, and ideally I'd like it to get all the way up here, but I don't have a position in this stock yet. I would like to see it moved up, and it's very extended at this point, but if it kind of forms a little bit of a handle and breaks out again, I'll probably take a small position at this time. So and one thing about kind of general process right now in this weak market, I'm taking smaller than usual positions with a usual stop loss. So overall, my risk with every new position, I'm keeping it very small. Is this one on your radar at all, Jack?
Absolutely, this one, especially with the earnings the other day, had a nice kind of breakout right where you should have right there. I like the story on this one too, because they're attacking a lot of health conditions, but in a different way. So I think that's a positive, and so I don't know many other people. It's a very positive company trying to coach people through their health conditions. And so I think they have a good story. I think the chart looks really, really good. May be extended, like you said, so it may need to, consolidate or back and fill a little bit. But yeah, it's definitely on my radar, and it's one of my stocks I have on my focus list also. So I do like that one.
And in general, do you think after this kind of crisis that we're going through, do you think there's going to be more and more investment into kind of medical companies in general, seeing as you're kind of in that field?
Yeah, I do. I think that we're going to, as in a general note, we're going to change the way we do things. I think this is going to, people are going to be a lot more conscious for a very long time for these health conditions. And I think you're going to see companies fill the need and the want from the consumer. And I think LVGO may be one of those companies. When you look at COVID-19, a lot of the people that are dying have type 2 diabetes, have other comorbidities. Those are the people higher at risk of dying from COVID-19. So I think companies like LVGO may be able to fill that need of society. So yeah,
great.
For sure.
So why don't you go ahead and talk about the companies that you picked. So I'll stop sharing my screen. There we go.
Perfect. I'm going to mine. Boom. Boom. Okay. All right. So my first one I'm going to go with is going to be SWCH. So it's a recent IPO back in October 2017. And let's go just make this a little bit bigger. Boom. So this is the area that to me seems to be important. And if you notice, I'm not always, my area of importance isn't always the tippy top right there. Because again, this was kind of like a false breakout. It just seems like this area is more important. And so we're coming back up to that area. So again, the stocks I picked may not all be right at buy points, but it's the ones that I think when the market is ready, these are ones I'm really interested in. Mm-hmm. I'm zooming in to more recently. One thing I'm noticing is this huge accumulation bars on the volume, right? And I really like that. That really jumps out at me. All the way back for a year now, they've been accumulating this particular one. We had that deep pullback. It kind of pulled back with the market, but it rebounded really fast. And we're coming back to this area of potential supply up here. I like how the moving averages now have flattened out. They're no longer declining. So they've already flattened out, and we're starting to see, hopefully, if it stays up in this area, you'll start to see the separation. So what I'd be looking at in this particular one is for it maybe, to come up into here, maybe to come back down a little bit, let these start to keep turning up, get them in the right alignment, which for me is going to be purple, blue, red, right? So my fastest moving average is my 23-day EMA, my purple one. Then I do a 65-day EMA, then the 150. And so I want alignment of my trends, of my moving averages. So again, it's not where I want it quite yet, but I love that there's accumulation. And I think that depending on how it acts in this area and how these moving averages start to align, you can easily manage risk up in here. So whether it takes, a week, 2 weeks, or a month, it doesn't matter to me, because as long as I see accumulation, I see this good looking base again, and you can almost see like maybe an inverted head and shoulders. If it does come back here one more time, that'd be a very strong pattern with everything, with the breakout and these aligned. So that's kind of what I'm looking for in this one. It's more of a setup that's still in progress, but when I see accumulation like this, I'm interested.
For sure. And even on that big red spike, it looks like the stock barely moved on that day.
Yeah, on this one, it was right there. It was right on these moving averages. So the bulls and bears were just fighting right here. That's the way I read it. But yeah, so that's my first one. My next one is going to be IPHI, IPHI. And so this one is at all-time highs right now. Look at that. So you see it's got a beautiful, uptrend going back, years. There you go. There's the IPO right there. So we're at all-time highs and making it bigger. Kind of like what you said, though. I don't love this. It's extended, right? I mean, it's not like I don't own it right now. It's for me. It's just not. It's not a safe entry right here. Now, if we chop around here, move sideways, that would change my mind potentially. Good volume. So I'm seeing the accumulation right here, which is really nice. And we're starting to get the alignment that I'm looking for, right? Things are starting to turn up. Now they're in the right pattern that I like. But for me, I want this purple 23-day EMA to be much closer to price. So there's too much of a gap here for me to start a position today. So again, it's one that I'm looking for hopefully in the future, but there's too much risk here at this point. Now, if we could get a little, maybe fill this gap, come close to a 23-day EMA, and everything is still aligned and starting to turn upwards, that may be a position. Even if it's below this area of potential resistance, I may put a starter position on right here, and then potentially put a second position right as it breaks out. So that's what I'm looking for in this one. Again, it depends on risk tolerance and your time horizon, but it's just a little too much space here for me. But it's at all-time highs. It's hard to argue with that price action. So I love it. I just don't know, but I'm just not buying it today. Again, especially if the market dips down and this holds in this area, like that would be my preferred entry right there. I don't know if I'm going to get it or not, but that's what I'm looking for in this particular one. What do you think about it?
Yeah, any stock that's hitting price highs in this type of market is one to put on your one to watch, basically. How are the earnings on SWCH and IPHI?
They're good. I don't have them in front of me, and so maybe you could pull it up on your TC 2000 if you have it up there. I don't have it in front of me, but I do. Most all of these are screened. One of my basic screens is let me see, is this one. So you see like this one. Mm-hmm. I have everything above this simple the moving averages. I do a volume, make sure it's liquid enough. Mm-hmm. Price for me is $5. I'm not buying anything under $5. And then again, I've talked about this with you before, the 30, 30, 30. Mm-hmm. And so that's one of the screens. And there's another one that this one showed up. I think I may have done the 20 screen, but very similar screen. What do you see for the earnings?
So for IPHI, the last quarter was only up 4%, but the estimates for the current quarter are up 39%, and sales last quarter are up 19%. So pretty decent. And the chart really for me speaks for itself. It's showing that institutions are keeping their shares in that stock and potentially even buying more. And the overall group rank is number 7. So it's one of the top stocks in the top groups. That's great to see. And it's actually number 29 on kind of my rank sheet that I do. And SWCH. So it wasn't even on my radar. So it's interesting that you brought it up. So it's number 689th on my list. And overall, the earnings last quarter weren't great, but the estimates for the current quarter are up 100%. So really good numbers there. and for the current year, it's up 91%. So, yeah, it seems like a strong stock. Return on equity is only 5%, which is a little low for my taste, but still decent. And overall, its industry group is 73. So, yeah, I'll keep an eye on SWC. It wasn't really on my radar at all, so that's interesting that you brought it up.
Yeah, and my last one is LLNW, which is Limelight Networks. So this one, it topped out in 2017, has created this very large, we'll call it base area. It's kind of tested that area. We had a deep, hard pullback, and then we are now back in that general area. So zooming into this, to the closer look, some good accumulation. You do see a distribution day right there, but it's kind of consolidating. It has that V with a little handle look that's a lot of charts have right now, but it is set up with the right pattern here. And if we consolidate and go sideways here and let these moving averages kind of catch up, I would consider a position. Let's see how far away this is right now. So right now it's about 7% from the 23-day EMA. I like to buy this honestly when they're almost touching. 2% is my goal. So if this can move sideways and let the 23-day EMA catch up, that would then help me define my risk and be where I'd like to be with this one. So it's got a pretty good pattern. You see that it's had some good accumulation in the past. And again, the volume is just so weird. It just, like you're just seeing this, as these are going up, you're just seeing this drying up of volume here. And that's the one thing, and so many charts, that is just keeping me really, really cautious. You don't have this impulse of wanting to buy. And I think that in really, really good markets, you're going to see an impulse. You're going to see, bars that look like this and bars that look like this. And so, I'll probably never catch bottoms, and I'll probably never, get out at the absolute top. But that's not my game. I'm trying to catch that middle 80-90% between the two. How does Limelight look to you?
So once again, it really wasn't on my radar at all, but I like that it's right near that previous all-time high. It seems like it's consolidating well. And yeah, I really like the volume pattern so those two previous ones that you showed, the volume pattern for me really stands out. You've got those huge green bars, and I've actually thought about creating a screen that every day I just look for stocks with above average volume and up a certain percentage, or even on the week, because sometimes you can just see there's one week where everything turns around and there's just huge weekly volume. So yeah, I like to take the look at the stock.
Yeah, if nothing else, near all-time highs, it's hard to go wrong with that, right? Because price is the number one indicator, right? It's the best indicator. And so I just don't know if I'm ready to dive in yet as far as taking any kind of big position, just like you said. I think that if you're going to dabble, right now I have two positions on. My two positions are Walmart, right? And it's Kroger. The Kroger stock, it's doing okay. I'm about flat on it. But those are my two. So I'm in staples at this point. Right. So I'm not looking for, high growth names because I don't trust this market yet. So those are my only two positions, and everything else is cash at this point. So that's, so that's that is what I have today.
Yeah. And I think it's interesting, the last time we did one of these kind of webinars, I think it was the day or 2 days before the start of this correction. So that shows you, and we were both very bullish at that time because all the trends were up, stocks were acting well, but it shows you how fast things can change and how fast you have to change your mindset and go defensive and protect your equity overall. I am very bullish for the future though. I was watching this webinar with Jim Ropel, who's a hedge fund manager, does a lot of CanSlim stuff. And he was talking over and over about being very optimistic for the future, how this is all going to set up a huge amount of fantastic opportunities. And I had that same exact mindset. I think once this really turns around, you don't have to catch that bottom, as Jack, you just said, but if you catch the meat of that trade, it's going to be very profitable for you.
Yeah, and I agree. Unless you think that, the earth is going to blow up, I think we're going to go higher, right? I mean, that's, the doomsday people think that we're going to zero, and that's just not going to happen. I mean, do we know where the bottom or the top is? No one does, right? Anybody that tells you they do is lying. If we do those two things correctly, we got a good chance of making money. And that's why we're doing this, right? To make money. Exactly.
You're not in it for the action. You're in it for actually being profitable at the end of the day.
That's the goal. That's the goal, right? To make some money and yeah, I mean, yeah, it's just, I keep looking at these moving averages going down, and maybe I'm wrong, because here, when in this section right here, I was thinking, okay, they're still kind of uptrending, right? That's right around here is when I think we had our first conversation. Mm-hmm. And I didn't really get out of the market till probably in this area right here. Once we kind of dip below, and I'm like, okay, things have changed now. So I was down right here, and I'm still not really back in the market that much right now at this point. So it's interesting and notable, the weakness in the Qs today, man. I mean, have you seen that today? Mm-hmm. That's just, SPX is up nice. The Qs are up only 0.4. SPX is up over 2%. So that's I just don't trust it.
Yeah. Well, thanks so much for everybody tuning in, and make sure that you leave a like on this video. And if you haven't subscribed to Jack's channel, there'll be a link in the description and popping up right now. So go ahead and check him out. Definitely worth it. Jax, thank you so much for doing this with me, and I look forward to doing this more often. A regular check-in on the market is always helpful.
Absolutely, Richard. You too. A lot of fun today, and take care, stay safe, and good luck out there.